Find a rose, Tor Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lean.
Hi, hello, everyone. Good morning, good morning. I'm Kathy Lean. If you can hear me, see me, give me a thumbs up. Let me know that you that everything's going well. Good morning, Tony. Good morning, Ben, Eugene. Give me a thumbs up if audio visual is good. It looks good to me. My hair's a little messy today, but who cares, right? The markets are rocking and rolling. All right. Okay. Hello, Cheryl. Hello, Tor. Cheryl, you won one of the challenges from Trader Fest, the Prop Trader Fest this weekend. So make sure you're checking your DMs from on X, because we did DM you. I didn't hear back from you, so make sure you are checking your DMs on X. It's going to come from the Prop Trader Edge account, and we want to reach you so that you can claim your free prop challenge. All right. Good morning, Judith. Good morning, Tonex. Good morning, Steve. It's been quite a snowstorm here in the U.S. I know it's not the real number, but I stuck my ruler outside. It was 22 inches on my patio. I know it's snowdrift, whatever you want to call it, but it's definitely been a tough go digging out this morning. I'm glad that we don't have to, glad that schools are closed and the kids don't have to go to school today. Okay. So the markets are kicking off with some really big moves this morning, overnight. As you know, the gold markets are open over on Sunday, and it already broke above 5,000. I mean, that's really one of the big stories that we have this morning, but it's not the only story. Before we get to it, let's see, where are you guys checking in from? Steve, from Jakarta. Yes, I'm sure it's beautiful weather down there. We're going to talk about the rate check from the Federal Reserve on behalf of the MOF. Yes, I mean, all of that is what we're kicking off this week with. As you have learned in the past couple weeks, or in general, I always say that the markets reward the prepared. And you come to our Monday sessions to be prepared for all of the possible scenarios, what to watch, what's driving the markets. And that's really what we hope to talk about today. And there's so much to talk about. I was just kind of walking through my list, and I've got at least 7 things that is moving markets. And I'm sure it's not even all of them. And I invite all of you to contribute, because these are just some of the things that, I think are important to watch. We're also going to talk about gold, how far it could rise, some price targets to think about, especially when we've already broken above 5,000. I have been saying for weeks that gold is one of those assets that loves to magnetize, which means just, gravitate towards big numbers, big round numbers. And we have been talking about how 5,000 was inevitable. Now that we've broken and hit above 5,100 in gold, and of course, well above 100 in silver, what's next? It's the fundamentals are the same. So it's really the price targets that we really need to focus on. But part of that is understanding what is driving gold, silver, yen, the dollar, and can that continue? And one of the questions is, are we about to reach a blow off top? The answer to that lies in whether or not anything is going to change. One of the big stories, I know not all of you trade Forex, but one of the big stories this morning is that the dollar yen has finally kind of seen its blow up top. And it took something. It took a catalyst. It took the catalyst of the Federal Reserve actually rate checking. It won't stop falling or rising until there's a catalyst. So to answer your question, Fred, it has not reached a blow-off top. It cannot reach a blow-off top until there's a reason for it. And it could be a small reason, it could be a big reason, but it has to be a meaningful reason in order to finally stop the relentless uptrend and basically inject 2A action in gold and silver. And what's moving silver is the same thing that's moving gold overall. So and of course, this is FOMC week. This is the Federal Reserve week. So that is part of the reason why we're seeing these moves today. So what I'm going to do, I'm going to share with you my chart right now, and let's put together our list of what's moving gold, and of course the same things that are moving silver, so that we can walk through them and understand whether the moves continue, and also what I'm thinking in terms of price targets for gold. So give me 1 second. All right, so right now you should be seeing my gold chart right here. And with the gold chart, what you're seeing is, obviously gold's 5,000 was right over, where's 5,000? 5,000 was right over here, right? So we just kind of perked just a little bit, poked our nose above 5,000. In no way, shape, or form is this a convincing close, right? Because if you've been trading for some time, you will know that oftentimes, we'll go up a little bit even on the same day and then end up closing a little bit like that. I mean, one good example is, is the euro dollar. Euro dollar, it rose to its strongest level since a while. This is daily chart since September. And we don't want to see something like this. I know, some of you trade gold, some of you trade Forex, but I just want you to look at price patterns. You don't want a scenario like this. Hold on, I need to mute my Discord. It's getting very distracting. 1 second. Okay. So we poke our nose above a certain key level, and then it reverses down. So we don't want gold to be a similar scenario where we poke above and then it reverses down. So far, it looks like it could, because look, we poked our nose above 5,000 over here, and we do have a convincing close above 5,000. But watch out, got a little bit of a gap here, and there's a possibility that we could retest this breakout zone before it moves forward. So that's all something that's very, very important to pay attention to. So let's talk about this. What's driving gold higher? Okay, so first off, help me come up with this list. I always like participation. What's driving gold higher? Of course, why am I going to second screen? All right, geopolitical risk. Greenland. It's not about Greenland right now, although I would say that Greenland is far from pacified. It can still come back. I don't think there's a clear resolution on how the deal with Greenland will be. So we've got Greenland, Venezuela, and then, of course, the biggest one, which is the Middle East. This weekend, there's been a lot of talk that a lot of the ships based out of the different bases are in active practice mode. I'm not a veteran or in military at all, but there's a lot of ships that are actively practicing their exercises, and there's also a lot of ships, as Trump said, they're moving to the Middle East. At a couple of days ago, there a bunch of European airlines halted flights to the Middle East. There's a lot of fear in that region. Why? It all has to do with Iran. Iran, obviously had a very deadly reaction to their the protest. Trump, spoke to, said that they promised that they would stop the killing. Seems like, based upon what Trump recently said, it has not happened to the degree that he's satisfied, or probably the rest of us are satisfied, and therefore, ships are moving in that region. And so that is supporting, as my friend said, it's supporting gold. In some ways, it's also supporting oil. That's number one. Number two is U.S. government shutdown. Today is, January 26th. The U.S. government is funded to the end of the month. So, the House passed its bill to extend the funding, but because of the ICE-related death in Minnesota, a lot of the Democratic senators are coming out and saying that they're not going to support the funding bill. And so they could, push for another government shutdown. If we have another government shutdown, it's another reason why investors, central bankers regular people want to be diversified away from U.S. assets into into gold, silver, and other metals. What else? Fed meeting. We know that the Fed is supposed to keep interest rates unchanged when they meet on Wednesday. There's pretty much a zero chance that we're going to see a Federal Reserve interest rate cut. But even though we won't see a Federal Reserve interest rate cut, the guidance is key. Sorry about that. The guidance is key, and it seems like they're still going to be cutting interest rates this year. And the one thing I want you guys to be aware of, which is number 4, there could very much be, and this is one of those things that maybe you're not aware of yet, but Trump could make his announcement Trump announced Fed chair pick this week. That could happen. Trump could announce his Fed chair pick this week. And it's guaranteed that his Fed chair pick is going to be someone who, basically wants more interest rate cuts. So if he announces his Fed chair pick and that person supports interest rate cuts or additional interest rate cuts this year, that is also going to be negative for the dollar, which should drive up gold prices because gold is priced in dollars. And that's really it, which is the dollar downtrend continues. Rand US has taken a big hit over the past couple of months. A lot of institutional investors, a lot of governments around the world, they don't really want to hold as much US assets. And part of the reason why yields have increased, is because they're not dumping, but they're selling US treasuries. So there's so many reasons for why the dollar downtrend could continue. From the US government shutdown to Trump announcing a dovish Fed chair pick, from the dollar downtrend continuing, from more tariff threats. Remember, all of these tariff threats have been hurting the dollar. And Trump this weekend, I think it was this weekend or Friday, threatened 100% tariffs again on Canada. Yes, the spotlight is off the EU, but it's on Canada still. 100% tariffs on Canadian exports for Canada, possibly making its own trade agreements with China. I mean, who can blame them, right? But Trump is certainly going to blame him for basically going against, the U.S.-Mexico-Canada trade alliance. But who can blame Canada for trying to make their own trade deals, or any other countries for that matter? So tariffs, any threat of tariffs, any announcements of tariffs, those headlines has and always will be negative for the dollar, because the markets and traders and investors punish the country that is the source of the trouble. I'm just going through my list. Number 8, the dollar yen is down 1%, which doesn't seem a lot today, but it's still, if we look at the charts, which we will later, it shows you that's finally broken that relentless uptrend, because the Fed joined in the rate checking. The Japanese could never do it alone. And I've said before that the only way for dollar yen to really reverse is if we have a reason for the market to think that the US dollar component is going to fall. And so we had the Fed checking rates this weekend. And, that rate checking is not unusual. But the fact that they said that they were rate checking for the US Treasury is new. And, it's a no cost effort by the US, right? They can help the Japanese finally stop the yen from falling just by saying some things. And so, that is part of the reason why the dollar is lower, but the dollar is hurting in general. Okay, now, what am I missing? John says, yeah, civil unrest. That is not civil unrest. Gives, people around the world is seeing what's happening in Minnesota. They're seeing what's happening in, different states. And it's giving them, between the U.S. government shutdown and civil unrest, it's another reason why they don't want to own U.S. assets. What else am I missing? So, potential for Fed governor change, potential civil unrest, geopolitical risk, the Fed meeting, tariff threats. All of these are reasons why gold has surged above 5,000 and why silver has hit 110. So now we ask ourselves, can the rally continue? The answer lies in whether any of these are going to change. So one of our friends earlier, Fred, asked, is silver going to reach a blow-off top? These things do not reach a blow-off top, gold, silver, until one of these things change in a material way. Now, geopolitical risk is probably one of those things that could change fairly quickly. I don't know how it's going to play out. I don't know, I have absolutely no idea what's going to happen in the Middle East. I'm not even going to try to guess, but it could, be pacified. It could intensify, but that is something that could change quickly. U.S. government shutdown. I think there's going to be more pushback before the resolution. We have been through this before. Oftentimes, the deal either happens at the 11th hour or the government shut down for symbolic purposes and the negotiations intensify, and then we finally get a deal. But either way, it's either going to come down to the nose or more likely get pushed beyond it until the Democrats get something that they want. And so I don't think one or two is going to change anytime soon. And then, the Fed can announce the Fed chair. That may not happen this week. It could happen next week. I have no idea. But when it happens, it's probably going to be negative for the dollar. So all of this doesn't seem like it's going to change. Oh, and we also have big tech earnings. Big tech earnings are also coming out. So everyone's kind of uneasy about, how those earnings could be. I believe the banking stock earnings were pretty good. So, that helped to support the equity market, but we've got the big tech earnings that's worth watching as well. So all of these things are big factors that could drive gold and silver higher. So now let's talk about price targets. All right. Let's talk about, let's leave this up. Let's talk about price targets. So how much has gold risen? Where can I put this box? Let's move it over here. Okay. So how much has gold risen on a percentage basis? The numbers are big, but let's go back. I think that the best time to start measuring the price rallies in gold is pretty much Liberation Day. That's when all the mess started happening. And that's when, we found out that it was going to be, the Trump administration wasn't going to be an easy one. So from basically April 4th, which is April 4th to 5th, is when we had the Liberation Day. From Liberation Day to today, we have seen a 69% rally in gold, pretty much a 70% rally in gold. Sounds like a lot, but on a percentage basis, historically, it really isn't. So if we go to our monthly chart, I think in terms of a uncertainty basis, the best barometer is the 1970s. When we had the 1970s, we had inflation, we had oil shock, and we had geopolitical uncertainty in the 1970s. And of course, the price of gold was much lower, so each move was more significant. But in the 1970s, the first, I would say, leg before a meaningful retracement in gold was, let me draw this better. From right here, let's zoom in a little bit more. We're going to go to the 1970s. So 1970s price range. So basically, before we really took off, from here to this first retracement. I don't know why it's not letting me draw the way I want to draw, but let's say it's approximately, let's just say it's approximately 200%, okay? So it's approximately 200%. Here we go. Anyway, it's approximately 200% before we saw a meaningful correction. 200% rally followed by about a 30% dip, followed by a recovery that took it up another, that basically took it up another 80%. And even from here to here, it was probably about 50%. So a lot of lines drawn out here. But basically my point is the first move, even though we're at record highs in gold, 5,000 is a big number. But during the 1970s, when a scenario that was kind of similar to right now, where we had massive inflation, geopolitical uncertainty, oil shock, we saw a 200% rally in gold that was later on followed by a 30% correction. So since Liberation Day, we have only seen a 69% rally in gold. So on Liberation Day or around then, we were where? We were basically 3,000, right? So we were at 3,000 and 3,000, 200%, rally in 3,000 would, basically take us to a much, to massive numbers, numbers, we can't even fathom. But if we just look at maybe even just a doubling, a 100% move, that would, and I think 100% compared to what it was before, which is 200%, compared to what it could normally go, which is 100% doubling of gold, we could easily get to 6,000. So 5,500, I think, is, unless if nothing changes, I think 5,500, like I said, gold loves to magnetize towards the round number. 5,500, a rally towards there, followed by a pullback, is easy, in my opinion, with, a greater target of 6,000. Now, in terms of what some of the banks are saying, if you believe them, if you follow them, if you believe their forecasts are right, basically, I did some research this morning, and Goldman Sachs is calling for gold to end 2026 at 5,400. So Goldman Sachs is calling for 5,400. And we know that it always goes more than this. And this is where they think it's going to end, which means that could go up, beyond that, go down and settle around that level. JP Morgan thinks that it's going to be at 5,000, but they think longer term, it can go to 6,000. And then the other forecasts, I don't think I've seen any updated forecasts yet, but there's other, let me see. There are other banks that are calling for, just 5,000, which we've already achieved. So I think 5,500, which, if you think about it, is what? Only about an 8%, 7% move from current levels. It's really not that much. 7 or 8% is not that much. Today, we're up 1.5%. We could easily get to 5,500 and even 6,000. In fact, if we really extrapolate, to this level, I think that there's a very, very good chance that, we could see 7,000 in gold. But, we're going to be realistic. We're traders. We don't go that far. I think, there will be no stopping gold unless one of those things that we talked about changes. We get up to 6,000. Okay. Who agrees with me? Who doesn't? Give me a 1 if you agree with me. Give me a 2 if you don't. 1 if you agree that we're going to do 1. Do you agree? We could see 6,000 gold. Give me a 1. And if you say no, give me a 2. 1, 1, 1, 1, 1. I mean, of course, everyone's saying 1. It's easy, it's easy for gold to get to that level, is the point that I want to make. It is, it's on a percentage basis, on a mathematical basis, it is not far. When it comes to trading gold, you've got to, number 1 rule of trading gold. What's the number 1 rule of trading gold? Stick with the trend until it bends. And right now, the trend is still intact. There's absolutely no reason for it to change. And if we look, I'm going to remove all this stuff here. If we look at, what you can use as a measure for a trend change, basically, moving averages are extraordinarily valuable. 50 SMA is usually what institutions watch for setting their stops, their key levels. The 100 SMA is pretty much, the trend is over a line in the sand. So the 100 SMA is oftentimes considered the line in the sand between bulls and bears. And 50 SMA is where a lot of stops are placed. So as a trader, if you're watching this move in gold, I've got a bunch of moving averages here. This is my 5, 20 is the yellow, 50 is the blue, red is 100, and green is 200. So you can see that, it's above all the lines. I like the 5 because that allows me, if I'm long gold, allows me to keep a very, very tight trailing stop on it if it continues to rally. And it does, the 20 is a perfect, point for a retrace, my friends. HJ Trace says gold doesn't give you an opportunity to retrace, but it does. The 20 is a pretty good point to go along with a stop at the 50. In fact, a smarter idea would be to wait for it to dip below because gold has high volatility. Get back above like here and then go long to make sure that you're going long back with momentum on your side. But even a dip back towards there is a good idea. So you can see, we're very, very far, unfortunately, from the 20 SMAs, but these will move dynamically. Where in the world did my number one rule of gold go? Number one rule, stick with the trend until it bends. Number one rule of trading gold. So that means that until we get close below the 50, ideally the 100 is the line in the sand. That means it's over. 50 is when, you got to think, it could be a red flag. And 100, the trend is over. On a shorter term basis, you can see my BK trend meter here. You can see that some of the indicators are starting to turn red. The 5-minute, 15-minute, 1-hour charts, 4-hour charts, 1 daily chart. This tells you where it is in relation to the SMA. Is it above the 5 SMA, 20 SMA, 50 SMA, 100, 200? Completely customizable to whatever you want. We also have an EMA meter that I watch, and this is really valuable. It's telling me that even though the gold uptrend is really strong, if we look on a shorter term basis, like for example, if we look at our 1-hour charts, you will see that perhaps the rally is starting to lose momentum, but the 5-minute chart shows that we're still holding, so we'll have to see. But it does suggest to me that we may be losing a little bit of momentum. What is the EMA charts telling us? Let's see. I'm just curious. And if you're wondering how you can get these trend meters, they're completely free. You just need to use the EDGE code for any of your favorite prop firms like Tradeify, Top One, Ola Prime, Think Capital. With Apex, it's BK Save. Send us your receipt and we'll send you the access to our BK trend meters. All right, so the EMA meter is also turning a little bit red. So it tells us, okay, not sure if the uptrend is over, but at least for today, we may see the max of the move. So it's actually, the code is EDGE for everyone except for Apex. You can use BK Save too for Think, but EDGE is the cleanest, easiest to remember. EDGE for everyone except for Apex. And you also get a great discount. I think it's like 30% with Ola Prime, 25% with Think Capital, and also 30% with Tradeify. All right. So gold, we talked about it. Gold could easily hit 5,500, 6,000. That's only a 7.5% move from current levels. That could be just this week's work for the matter. Now let's talk about the Fed. Let's talk about the Federal Reserve rate decision. Every single time we have a central bank meeting, I love to build these tables for you, which basically shows you how the economy changed from the last meeting. And so this is the Federal Reserve. The last time they met was in December. At first glance, I want to ask you, do you see more green, which represents improvement, red, which represents deterioration, or just about the same, neutral, which is black? Type into the chat, do you see more green, red, or black in terms of how the U.S. economy changed? I'm not sure which link you're looking at, but Boris can put up the QR codes later. You could just use the code EDGE at Ola Prime and Think Capital, and it will work. All right, so there's more green than there's red. And it's almost hard to believe, right? I mean, it feels like the global economy is slowing. It feels like the U.S. economy is slowing, but the data is not showing that. Retail sales for the US, holiday shopping was really good, up 0.6%. It's probably a good chance that December numbers were good too. University of Michigan Consumer Sentiment Index, consumer confidence, all of it is really, really good, because investors, US Americans, they're basically looking at the stock market. They're seeing the stocks are hitting record highs, and they're seeing that, look, the markets are doing good, and they're happy, they're optimistic, they're spending, and so consumer sentiment is strong. Job growth has slowed, yes, but average hourly earnings are growing. Also, more importantly, jobless claims have been hovering around 200,000. So even though fewer people are getting fewer people are getting jobs, fewer people are being fired at the stage right now. You know, you're hearing my hesitancy in my voice because I don't really believe the number. I mean, I want to hear you. Do you think that if you're an American, do you really think fewer people are losing their jobs? Maybe I'm wrong, but and more people are losing their jobs in the circle that I, and the people I talk to, my, just in general, I'm getting more and more reports of people losing jobs than getting jobs, but the numbers don't show that. Inflation is easing, and that's something to watch. Housing market activity is neutral, but it is going to be suffering from the fact that U.S. Treasury yields have gone up. But manufacturing activity slowed a little bit, but service sector activity is still kicking, and the stock market index is up. Bond yields are pretty much where they were in December. So overall, if you were the Fed Reserve, if you were Jerome Powell, and you looked at these numbers, the case is not there for you to cut interest rates or raise interest rates. And there's red and there's green. If you were Jerome Powell, if I was Jerome Powell, the numbers don't show enough improvement or deterioration to justify anything. And the fact that there is improvement is a reason for them to sit on their hands and do nothing. And inflation is lower. Hold on one second. Inflation is lower, but it's still well above 3%. Or sorry, well above 2.5% or even 2%. And so given that's still well above 2%, it's still too hot. So that is why the Fed is not expected to cut interest rates on Wednesday. Now, we always say that expectations matter, right? So when is the Fed expected to cut interest rates? If you're ever wondering where the media gets its numbers from, like the market's pricing in X% chance of cutting interest rates or not cutting interest rates, this is what the market thinks. This is where they get it from. It's from the CME Fed Fund Futures. This is what shows what the market is pricing in terms of interest rate changes. So we click on the Fed Watch, which will generally be the first link that comes up. You will see that over here for January is the next meeting. Currently, interest rates are 3.5% to 3.75%. This is the way to read it. So 3.5% to 3.75%. There is a 97% chance. The market is pricing in a 97% chance that interest rates will remain at 3.5% to 3.75% at the end of this meeting. So the next question becomes, when does the market actually think the Fed is going to cut interest rates? And so we look at March. Is there any rate cut priced in? 3.5%. Let's look down here. Kathy tells me to look down here. 84% chance of rates remaining unchanged. Only a 16%, you add these numbers up, only a 16% chance of a interest rate cut. So no, a rate cut is not priced in for March. Let's see. April, 3.5%. We're looking down here. This is what Kathy's telling me. No rate cut priced in for April. When is the Fed actually expected to cut interest rates? Look at that. Maybe June. June, the number's above 50%. June, it's basically 59% chance of at least a quarter point cut. It's not 70, it's not 80, it's not 90, it's not 100, but this is when the market thinks that the next interest rate cut could come. Maybe June. In July, by July, they think, there's basically they think there's a 70% chance. So right now it's telling you that the market is only pricing in I would say, this is where they think the interest rates will be. I'm clicking all the way to December. By December, the market is only really pricing in one interest rate cut from the Federal Reserve. The Fed is telling us they only have one interest rate cut by then. Question is, how many interest rate cuts do you think we're going to get this year from the Fed? I don't think it's just going to be one. I think it's going to be, of course, the market could boom, this and that, things could be very different. But as things progress right now, and especially if we get a dovish Fed chair, I think we're going to get at least two. Let me know how much you think. And so if the market is expecting nothing until June, which is pretty much, the ends, Powell's term ends in May, I believe. If they're not expecting a rate cut until the next Fed chairman, then, if anything gives them a reason to think so, the gold prices will soar even more, the dollar will fall even more. But this is what we watch in terms of what is priced in for the market. So that's gold, and that's the Fed meeting. We also have the Bank of Canada rate decision this week, and the Bank of Canada is also not expected to change interest rates. But the guidance will be key. I don't think Powell is going to say anything. I don't think he's going to set the stage for, when interest rate cuts are going to happen. I think he's going to sound wishy-washy, say they continue to be data dependent. This is not one of those important meetings. I mean, it's important. Every single Fed rate decision is important, right? But I just want to show you, because some of you are new and you're just learning fundamentals with me for the very first time. Federal Reserve FOMC meeting. We're going to go to the calendar. This is not one of those important meetings, okay? And the reason why I say it's not one of those important meetings is because it doesn't have an asterisk. The reason why asterisk is so important is because that is when they update their economic projections and provide the dot plot. The last time we got the asterisk is in December. It comes 4 times a year. And usually what happens is they've got to come up with their latest economic projections, right? So they got to do a lot of work. Their staff got to crunch a lot of numbers. And so, that meeting is more important than usual because they've done their homework to project where they think the economy, the growth, unemployment rate, inflation is going to be. And that's when they release the dot plot, which says, where do each of the individual central bankers think interest rates should be at the end of the year. This is not one of those meetings. Federal Reserve meetings are always important, but this is not one of those meetings where I think it's really going to be that impactful. March, on the other hand, is going to be very important. So we get the 2 o'clock interest rate decision, followed by the 2:30 press conference from Powell. Typically, what happens is that we get a knee-jerk reaction in the first, 2 or 3 minutes after the initial rate decision, but this one's pretty much a done deal. No rate cut at all. I don't think we're gonna get any movement. Then we get a bit of a stall, and then Powell speaks at 2:30, and any of the important questions that the market wants to ask are generally asked in the first 15 minutes. And so after 2:45, that's when the real move of the day happens. So that's the rundown for the FOMC rate decision. However, I do not advise people trading on FOMC day because it can be very, very volatile. The other big story is, of course, dollar yen, right? Red on the screen, Kathy's BK trend meters all have red, and you can get the trend meters for free. I'm gonna write this: trend meters free if you use the edge code for the prop firms, and BK save for Apex. I'm just gonna type so it'd be basically you get the best discounts. It'll be Hola Prime, Think Capital, Tradeify, Top One. You get the best discounts, and BK save for Apex. So what happened here? Bank of Japan and Japanese government have been trying to get the yen to stop falling, dollar yen to stop rising for months. It's been very, very fruitless. It's been a waste of their time. So what in the world happened on Friday that triggered this huge move? The only way the Japanese know that, first of all, Verbal intervention by themselves is not going to work. They had the opportunity to raise interest rates, but because, we looked at the table, things have gone south for Japan. There's been more deterioration. There's been more red than green for Japan's economy. They could not raise interest rates. Also, Japanese yields have skyrocketed. We said this last week when we did our Monday talk. I said there's no way they're going to raise interest rates because the rates are already high themselves. They're already skyrocketed. So by raising interest rates, they make it even more difficult and more challenging environment for their businesses and consumers. So they couldn't raise interest rates. They couldn't verbal intervene. They didn't want to physically intervene because they know that physical intervention doesn't work unless it's coordinated intervention. And that is the key. The only type of intervention that works for Japan is coordinated intervention. Only thing that works. So on Friday, this is what happened. As one of our friends said earlier, on Friday, we basically had the U.S. government basically come out, and the Federal Reserve said that they're checking rates for the Treasury. The Treasury are the ones that intervene in the currency. Just like it is the Ministry of Finance in Japan and not the Bank of Japan, the Treasury is the one that intervenes in the currency. So the market was spooked. They were spooked that it could be possible that the U.S. and Japan could come into the markets and do coordinated intervention. Now, I don't think Trump really has any interest in helping anyone, and therefore probably would not have come in to actually intervene in the currency. But, words don't hurt, right? I mean, words, well, let me take it back. Words can hurt a lot. But in this case, the words in terms of helping Japan and saying and checking rates doesn't cost the U.S. anything. And therefore, the threats and the possibility and the risk of coordinated intervention between the U.S. and Japan is what turned this around. Now, has the fundamentals changed? No, not really. But a lot of people, if you look at this move, 159 all the way down to 153.40. A lot of people got shaken out. But look what Kathy said. Kathy said this is the line in the sand. Stops are a lot of stops are hit. A lot of stops are placed at the 50 SMA. So when those stops were triggered, that's when we had the gap lower in dollar yen. And the 100 SMA is the line in the sand. So the trend is not over, like over here, until we close below the 100 SMA in a firm way. So right now, the buyers like to come in around the 100 SMA level. It's happened time and again. And that's exactly, no coincidence. That's exactly where they came in. And that's why, watching these moving averages are so important. And on an intraday basis, you can see still red on the screen, still bearish. I would still, be looking for opportunities to sell. And, even the hourly chart shows we rebounded a little bit, but looks like it still wants to go down. So until we get a close below the 100 SMA, the trend is not done. And these meters are so useful because you may be looking at a million other things. You may be looking at your opening range breakouts. You may be looking at your whatever else that you're using, or you may be looking at 5-minute charts and not being aware of what's happening on the 1 hour, 4 hour, 1 day chart. Having these meters on your screens give you a quick glance and make sure that you're aware of what the bigger picture is. This is basically multiple time frame analysis on one screen, on your screen. So this is extraordinarily valuable, completely free. If you use our code, send us your receipt, and we will give you these trend meters for free. So that's the story with Japan, which is that until this 100 SMA is broken, the trend is not over, but still, it's going to be between these two levels here. Sell on rallies rather than buy and dip until we get back above the 100 SMA. Seems like really far levels right now, but these lines will move. They're dynamic, right? As time progresses. So those are the big events to watch. We're at the market open. I wish I could talk to you longer, but I know you're eager to trade with Boris. On the calendar, there's so much else going on that's worth watching. We had the German IFO report, which was a little weaker. Where's my calendar? We're just going to take a very quick peek at just the highest level events to make sure we're not missing anything. We have Australian inflation data. Australia, The Aussie and Kiwi are the best performing currencies because, first of all, inflation's hot. Their distance from all of this geopolitical mess makes them an ideal place to park your money. Their numbers, jobs reports have been hot in Australia. So it's expected to continue to outperform, and the inflation data is expected to continue to be good. And then we have the most important thing for Eurozone this week, aside from IFO, is going to be on Friday when we get the GDP numbers. GDP and CPI numbers, that's going to be very, very important for Friday. But Wednesday, we get the FOMC rate decision, GDP on Friday. So I think trading should be good. Monday, Tuesday, and then Wednesday, I would not trade until after FOMC. And then Thursday and Friday will be some good trading opportunities as well. So now I want to invite in Boris. You know, I know that you guys typically with these sessions, what we do is we roll from kind of market analysis to live trading. So welcome, Boris. And, you know, I think everyone's ready to trade. If you're ready to trade, give a thumbs up or
give me a +1 if you're ready to trade, because I have been trading all night long. You guys want to see my trading rolls? I'm going to show you. Let me show you actually my screens. I'm going to take the screen here. Okay, hang on. Let me share my screen. Oh my God, so much stuff going on over here. So much fun. Okay, let's try this. So we're gonna trade wealth charts today because I've already literally hit my limit on Trade-Evade. Let me show you my Trade-Evade numbers here today. I did everything like I really traded to plan today. I'm going to show you a couple of really cool little tricks that I used. Where's my Trade-Evade stuff? Here it is coming.
All right, I'm going to bid adieu. Sounds like everyone here is ready to trade.
Yeah,
so
look at this.
I'll leave it in Boris's hand.
Bye, Kay. Have a good time. Thank you for all your macro. But look at the money we made on gold here today. You guys, you guys can't see it. Hang on. I rolled basically every single account, 100 up. So now this is like $700, just an overnight trade, only primarily in gold. So now we're going to switch over to.
But I had to ask you, Boris, just reinforce them. So it's $100. It's $100, 20 accounts. You know, that's the way.
Well, we have
10 accounts.
We have a split. We're trying to make $100. These are all funded accounts, right? So we're trying to make $100 per account. And so these are the Trade-Evade accounts.
Are you copying them? Are you copying them? Is what I'm asking.
No, this is the old-fashioned hardcore way, 100 per account. So the reason we do this is because we don't want to amplify our risk, right? This is sort of our much more conservative approach. Once we get to payout levels, we may consider bunching them up into some trade copy groups. But this is a way for us to just absolutely make certain that none of these accounts get blown up. You see how these are all growing from their 50 base. This one is like $500 away from getting paid out right over here. So that's our 3 yards in a cloud of dust, a very, very conservative approach to how we're going to run the accounts. Same idea, by the way, in wealth charts. Same idea. You see how we're just slowly but surely just creeping them all up towards payout basis. It's a much more conservative approach to trading than what we usually show. But, you know, conservative, aggressive, none of it matters if you can't make money, right? So I'm going to show you the tricks that I've been using. And we're going to go to the Trade-Evade. Hang on, we're going to go to, we're going to trade wealth charts today. Because as I said, I already, you know, filled my quota on Trade-Evade. So let's make some money on wealth charts. I'm going to show you a really, really cool trick using my BFF dots that just really improved everything I'm doing today. This is the end result of what happened here. Who is interested? Give me a +1 if you guys want to see my latest tricks of the trade in the room. I want to see at least 10 +1s before I start sharing this with you. And also, everybody go out there, go get accounts from our friends at Ola, our friends at Think, our friends at Apex. They're all really, really great. I want to thank everybody. By the way, I haven't had a chance to thank everybody for Prop Trader Fest. Prop Trader Fest was amazing. We had almost 3,000 traders, concurrent traders at one time. 5,000 people registered for the event. So really, I think it was a super, super fun, interesting success thing. And for those of you who paid the money, who made the the charity contribution so that you can watch all of this on demand. That will be coming by Wednesday. We're putting it all together into a nice, neat little course package. There was 11 or 12 presentations. Every single presentation is going to have its own little video. So it'll be very easy to access. If you're still interested in signing up for this, I don't have the link with me right now, but we sent out an email to everybody. It has the link. So it's not too late. It's actually not too late for any time to make those contributions. We've raised $5,000 for St. Joseph Children's Hospital and for the Warriors charity. So it's really, really, really great. I want to thank you, everybody. As I said, every dollar you guys contribute here, as far as getting the videos, that all goes straight to charity. I'm going to be very happy once we kind of finish this up to send this to charity, and then I'll post it here and show you our charity donations in your name. We're going to put your names on there as part of the thing. It's just been a really great event from every angle in terms of getting it all done. But all right, back to money. What's going on right now? We have gold making fresh session highs on a green label. That's just our pure money trade. I'm just going to trade this right now long, right? $2 target. Here's the key thing that I kind of just completely just sort of had this really interesting realization over the weekend in terms of scalping, especially gold, but this is going to apply to NASDAQ as well. It's just that gold has been so, and money, boom, you see that money done. I'm not even, didn't want to put if you put all my trades on here, it will look like the St. Valentine's Day Massacre. This is me trading while Kay was talking and putting about $300 into this account just on 2 micros. I'm trading 2 micros on this particular position. And I'll explain to you why I'm doing all of this stuff in small but very, very consistent sizes. So we're going back up to the 5100. I guess they're going to try and run the 5100s. The reason why I just don't have the trademarks is because there's just too many trademarks on the thing. But you guys get the idea. So that's a bread and butter trade that we always do. Session highs off the BFF indicator. We get a green label on session highs, red label on session lows. We hit it. But that's kind of like, we keep running. He just keeps running, and we may play this again. I'm waiting to make sure that this holds, and if it does, I'll play it again. But that is just kind of like 10% of what I was doing, and I'm going to show you what I was doing. That was really, really working very well, and continues to work very well. And it's going to, I think, challenge a lot of people's ideas of how you want to scalp. But in this high volatility, huge movement environment that is gold, it has been money. And what I've been doing basically is the following. First of all, I'm trading small size. I'm trading 2 micros, right? I'm trading for $2. So every trade I'm trying to make is a $40 trade. That's, by the way, it's very easy if you're doing $40 trades. It's just 2 trades per account. You're $100, in the account. Boom, you're done. On the eval side, obviously, you can just keep going. You can make 10 trades, 14 trades, and now you're $500 in the eval, 5 days, and you're funded without really, really risking any serious size. But what I do, and I think the easiest way to do this is to kind of understand how markets work. I'm going to do a very, very bad. Hold on a second. Why is this not working? Oh, freehand. Okay. I'm going to do a very, very bad diagram of how trades work, right? So this is a classic trade that we're doing. We have, the high, we have a breakout, and the thing just verticalizes. This is the trade that we just did right now, right? So that's case 1 of how trades work, okay? And I want to delete this. Oh. I have to delete all of them. Okay, that's sort of scenario 1 of how trades work, right? Scenario 2, and I'm just giving you the upside. Obviously flip it over to the downside. Scenario 2 is trades sometimes don't work. You're buying the up, and it just goes straight down, right? Just a complete, either upside down, this is an upside down V, or if you are, if you're short, you know, you're selling it over here, it just goes up against you, a total V. That's case 2, okay? Everybody following me on that? I just want to, sorry, I'm learning how to do this in learning how to do this in what do you call it? Well charts. Oh, I guess I should do this too. I should get rid of this. Okay. And then there's case 3, which is completely, I think, underestimated in terms of how you want to do this. And by the way, I'm just watching this right now, guys. You see this failure at 88? You see that we have a red bar against a red slope? I'm actually going to do this. I'm going to trade with you guys right now. I'm going to sell this right now. And I'm going to show you in real time kind of my case 2 scenario. So I'm short over here at the 78. I'm going to put out another level at 82, right? And I'm going to show you what I'm doing right now in just 1 second. So if this hits me at 82, okay, I am going to put myself up all the way up above over here on the stops. And I'm going to put myself, and I'm just going to flat myself out. I'm sorry, it was too fast. But you see how fast that was in terms of resolving my trades? This is case 2, which I believe is totally underappreciated at how profitable case 2 is. And case 2 is that prices rarely go, shit, hang on a second, sorry guys. They rarely do this. They rarely go up, right? I'm going to delete this. And they rarely go down. Those are like 10% of the time. In every single bar you've ever seen, they rarely do this. It's a 10% bet. And yet everybody thinks that's the bet. Everybody thinks that's the bet you need to make because that's the assumption. It's either going to go flying my direction or flying up, right? Let me see if you guys can kind of understand what is like an 80% price action. What is the state of price action 80% of the time? It doesn't matter if it's going up or down. Doesn't matter if it's going out or down on every micro level that we see, right? You know what it is? I'll show it to you. It's this. If you're going up, right? If it's going up, it's almost always does this crap before it goes back up, right? It's almost always 2 steps backwards before it goes this. It's always wiggles down, right? And if it's going down, it's almost always wiggles up before it comes back down, right? The money is in the wiggle. The money is here. This is where the money is. This is the high probability money. The money is the fact that 90% of the time, your first trade is not going to be your best price. Not going to be your best price, right? I realize these things look a little funny. Okay, so I didn't mean to draw like bad penis pictures here, but you get the idea. I'm a terrible drawer. I need to, everybody give me a +1 that you understand that almost all price action is wiggle price action. Wiggly, 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 right? I want to see at least 10 +1s. Otherwise, I'm talking to the wall here. Three feet of snow. Holy cow. I know, New York's, we're buried too. My dogs just refuse to go out. I'm just like, they're not even bothering to go out. So you guys agree, every single price action is kind of a wiggly price action, right? And so we have like this one scenario where everything goes your way. Another scenario where nothing goes your way. You just get a V-shaped reversal or a V-shape upside down V, either a V-shaped reversal from the shorts or an upside down V where it falls from the high and completely dies, just completely dies out, and there's nothing to do, right? By the way, this was a pretty good V-shape die out. If you bought this one, if you continued to buy this one, like if you bought this one to the high, you would have gotten down. I noticed I didn't buy it because there was no higher high here, which was the key thing to keep us out. But anyways, those are 10% probability bets. Either get totally blown out or get totally paid out, right? The money is in the middle. The money is in the gray area. The money is in the wiggle. And the way to trade the wiggle is by giving yourself two things: ample stop room, and the ability to work in one, maybe even two additional trades, and then resolve everything super quickly, once it goes your way. Because you very often, you don't have, the key thing to this is that you don't have the luxury of waiting. If it's gonna, it's gonna give you this quick chance to make money, you better take it, because otherwise it'll just continue going in the opposite direction of where you're at. So you can see me over here. I'm constantly trading the wiggle, right? I'm entering, second wiggle, taking back, second wiggle, selling it here. This just blows through. I don't have to do this. But on the other hand, upside comes in. On the other hand, I get short, wiggle, come back in here. So like almost every second or third trade is a wiggle trade. And because we've had, because gold is so strong, I've had some really good, strong, just, power trades based upon the direction of the move. Now, all of this is very, very important, is set against the price action, the immediate price action. And the most important part of the immediate price action, I mean, obviously, the labels are there. The neon labels are showing you higher highs. They're the most curated signals for you, right? But if you want to be in front of the price action with my indicator, let me get rid of, this is just horrific, all the trade data. If you want to be in front of the indicator on the price action, right? If you want to be sort of anticipating, go where the puck is going to be in the old Grain-Wetsky's style. There's a couple of tricks here that I started using that really help you get just quickly enough on the trade, ahead of the trade. Like for example, right? Right now, you're looking at green candles. They're all green candles. But what is an absolute verboten, what is absolutely just a waste of our time to even think about buying this, is the fact that the slope is all negative, right? Slope is the single most important thing that I want to look at. Like right now, slope turned positive, right? Slope turned positive. And if this thing stays green, gives me a higher high, it gives me like, a little neon green label, yeah, I'm ready to go. But if it kind of dies out and doesn't give me the neon label, it's not a trade for me to the upside. And conversely, and this is where it gets really, really cool. If you want to get ahead, well, here, sorry, that label didn't give us a trade. This one may be giving us a trade. We'll see if it wants to. We'll see if they really, what we saw here is they ran the 590s, they sold it off. They're going to try to make a second run for it. They clearly want to take the 5100s, right? They clearly want to make this run. So we're going to go and trade with these guys if the label stays, if everything stays, because the label is going to confirm to us that the slope is good. Oh, here we go. So we're in at 686. We're going to try and buy, some at 84 if we can. All right, we bought some at 84. We're going to bring them down over here to see if we can resolve it quickly. And we'll keep our stops really underneath this big range. That's where we want to be as far as our stops. Let's see if we can resolve this. This may not go because it was a tired move here on the thing. So this may be my first losing trade in a while today, but that's fine. Because you could tell that the price action is kind of really, really exhausted. But I am basically trading over here. If this thing flips on me, and this is where it gets really interesting. I'm going to show you. So if the thing flips on me, red, and the slope turns red, I'm going to completely turn my trade around and go short. I'm just waiting to see if it holds the slope and the price action. See, the slope's still staying green, the price action underneath here. So I'm going to stay with it because I'm going to see if the buyers can kind of hold support here. I'm letting the slope guide my very, very near-term ideas of whether I want to get out of this trade or still stay in it because there may be some chance of a rescue. Clearly, this trade was pretty much a loser. I chased the top, and that happens. You're going to chase the top. This was obviously the second run towards the thing, so it sort of exhausted itself. But I'm going to stick with it unless the slope tells me no. And actually, what I'm going to do is I'm going to just flatten out this position a little bit because the trade wasn't great, right? I was already in a loss. Now I took a small loss. If the trade really wants to run higher, I will come back and retake it. But the interesting part, and this is where it gets super, super interesting, is what if this is an exhaustion point? What if this is kind of like, what if the gold bulls can't push it through the 90s, right? Look, so far it looks good. If you guys held into this trade, you probably would have made money. I got out because it was a small loss for me, and it's fine. So it looks like we're going to make session highs. It's almost like, at this point, we got to completely reorient ourselves to positive because they clearly are going to run the session highs. So this is our bread and butter trade. I got to take it if it holds. Again, it's got to hold. Label's got to hold. Everything's got to hold, so on and so forth. Now, I got shaken out of that trade because of this red bar. And that happens. Let me see. Wow, it's really, really running. Okay, so now we're at 91s. I want to be a buyer maybe at around 88s, somewhere around over here on a retrace, on a wiggle back. And I really want to be sort of underneath here. Like if I'm, if this thing breaks the full big bar, this is a big, big breakout bar. If we start coming underneath there, then clearly the bulls just ran out of gas. And if they didn't, then we're going to just flatten out ourselves. Here we go. Good enough. I'll take that trade and recover my tiny little loss. And now I'm back to full profit. I didn't take the full $2, but I took the like $1.07 out of this whole thing. Again, because I think that we're getting very, very frothy over here. Now here's the thing. My view is I'm getting very, very frothy over here. I think the price action in gold is kind of going to, on the near-term basis, is going to top out. So what do? The thing that I don't do, the thing that I used to do all the time, like a moron, is go, oh, it's really, really high. Let me short the 90s. Let me short the 95s, right? Because it's very, very tempting to short this and then only see it go higher and higher and higher and higher. What I do now is if I have a bias to the short side, is I actually wait for the price action to do two things. I'm not even waiting for the labels, but I'm looking for this very, very clean near-term signal. You know what that signal is? I need to see slope go red, candle go red. If I have a candle red, slope go red, it's like the first indication that the buyers exhausted themselves and the sellers, the sellers could try to put in a near-term top. And then I can trade against that top that they put in as my rational point. And if they wiggle me back up to the top, for a second double top, I'm going to put myself in there and try to take the trade back. But at least I'm going to be positioned in a much more intelligent fashion because I'm not anticipating a top. I'm waiting for them to form a top and let my indicator show it, right? So everybody kind of following me as I'm watching this price action. Right now, I got nothing to do. We're hitting session highs, but I'm like, I don't want to chase these session highs. If it goes to 5,100, great. I'm actually going to look for a short and around that level, but only once the indicator confirms to me that there's a viable short signal. Like what's very, very cool. And one of the reasons why I was so effective overnight is I stopped trying to guess tops and I started just, looking for top confirmations. Now, if you're a continuity trader and you love trading, remember, this is 60 to 90. It's been a 30-point move. So you want to buy the top of the 30-point move? Be my guest. You have more balls than I do. Or at least, that's not my personality. But you're certainly welcome to. It's definitely worked for you, here, work for you here, work for you here. The question is it going to work? Are we going to run the 5100s? We'll have to see. Now, the other thing is, some of you may be thinking, where's NASDAQ? And my answer to you is nowhere. It's not that I don't want to trade NASDAQ. It's that gold is such a big mover that you snooze, you lose. We really can't keep our focus on two instruments in this environment, right? We're either going to trade gold or we're going to trade NASDAQ. Now, if you guys want to, in about 15, 20 minutes, you want to switch over to NASDAQ, I'm happy to switch over to NASDAQ. Gold has been a money machine all night long, all morning long. And maybe, it's the end of the money machine or at least a pause. But I'm happy, but the same principles that you see in gold, I'm going to apply in NASDAQ, which is I'm going to trade the wiggles. I'm going to trade all those things. So again, gold is making fresh session highs, right? And if you want to chase those, be my guest. I'm not. I'm just simply waiting because I think we're getting a little bit exhausted here on the move. I'm happy while this is doing it to take a look at see what NASDAQ is doing, which is also obviously clearly running session highs. Now, NASDAQ, on the other hand, is a much easier trade to take to session highs because it's relatively young in its trade. 700 to 800. Can it go to 900? Yes. We could have traded NASDAQ all the way over here too. Would have been a beautiful trade here too. But sort of late to NASDAQ, so I'll just flip around between the two and watch around. I'm actually kind of curious. I'm actually totally okay with watching for a failure signal in both. Although NAS clearly has a little bit more room to run. But the same principle in NASDAQ, I'm going to use in gold. So how do I know that there is a near-term top? A near-term top is something that just gives me 10 points on the retrace. That's all I want. I'm not looking for a definitive formation. I'm just looking for a short pause that will give me a quick, high probability money scalp, which is what I want to do with all of these ideas. I don't have any long-term notions. I mean, I do in a sense that, yes, I think gold is eventually going to go to 6,000, although hearing Kathy say it and hearing all of you guys give me plus ones made me think that we're probably going to top out here because the sentiment clearly is just way too skewed on gold right now. One of the things I think that is very, very viable is we could have a day where gold is going to do a 200-point down move in a matter of like 10 minutes. Not a 20-point down move, but a 200-point down move. And I think people need to be prepared for that. All right, so I'm watching gold, right? So gold getting a little exhausted at 95, right? They clearly are building some offers because they want to see if they can hold it back from the 5,100 run just yet. And that's the operative word. It's not Mr. Forever. It's Mr. Right Now that I'm interested in. What is that? What's that term? Like people always. Okay, so here we go. Here's NAS. So NAS starting to show a little bit of exhaustion at this 860, 850 level, right? Slope still positive, but we can't make fresh highs. We're going to watch this very, very carefully. If we have time, maybe we'll trade the NAS to the short side. We'll watch the gold too. But instead of just simply guessing that, this was the top, we're going to let the market, assert us. So here we go, 95 to 91. Price action starting to sell off. Still a lot of, buyers, sellers across the 8 SMA, everybody trying to fight their position right now. All right, I'm going to get short here. 89. I'm going to try to put myself out at like 92 on the offer for the secondary, and see if I can get done on the first one. And I got done on the first one. Now I'm going to cancel all. Cancel all. I'm done. Right. In this particular case, I hunted the short. I killed it, and then I got out of my wiggle. I had my wiggle position over here, and it's fine. Right. And it just gives you a really, really good idea. Mr. Right and Mr. Right Now. That's it. Thank you. I forgot. I'm not marrying Mr. Right. I'm just marrying Mr. Right Now. That's really the foundation of our scalping philosophy, by the way. I guess we're all promiscuous sluts when it comes to trading. So I'm totally okay with that. So is my wife, I think. Although my wife is the exact opposite. My wife, who's a hedge fund manager, like will marry her stock for like 5 years, so it's all a matter of how you position your life. But anyways, you guys see what happened here on gold, how I waited for the indicator to give us the interesting signal. Like, yes, we could have made money up. We could have made money up. We could have made money up. But at a certain point, I decided that the risk of making money up was greater than I thought. The reversal trade was a better risk. In this case, it clearly was a better risk. It didn't require even a secondary move, right? And that's literally all I'm doing all day long, all night long, is that I'm just doing these kind of analysis against the price action. And especially, of course, this is the best thing is to do this against the price action where it's session highs, session lows, right? Where's NAS? So NAS did not break the slope. So let's watch NAS. Let's play NAS here. Let's see if NAS is a little bit exhausted, or NAS has more to go. And I said to you, I thought NAS may have a little bit more to go. So NAS right now is kind of bunching up, and it's really not showing us what we need to see, but it may. The buyers are trying to push it through the 860, but the sellers are holding all the offers at the 860 level. We'll see. We'll give it a couple more candles. We'll see what happens. If the price action goes red, slope goes red, then we have a intelligent anchor point against which we can trade. If it doesn't, we just stay patient. See, it's still fighting. It's fine. Let it be. Slope is still green. Even though the candle is red, slope is still green. I'm not ready to commit. I do have my standards. Oh my God. Did I take the trade when I first saw the label? No. Because I'm sorry. What are you referring to, Ben? I didn't take I took the trade in gold. In gold, we took the trade once the candle closed and the slope was red. We just shorted the hell out of it, and that was a nice clean dump. And again, it was just I'm looking for that $2 point. I'm not a committed bear here that thinks that we're going to go back to 50-50, right? I have no idea. We may still run the 5100, but I'm going to watch this. I love watching the price action around the highs, the lows, and the key thing that I'm really watching, guys, is the slope. The slope is the first indicator to me, telling me, okay, they're keeping it up, they're keeping it down. That's I want to be on the right side of slope, not even necessarily on the right side of the moving average. Yeah. Okay. So the point is the money trade here in NASDAQ, because we were, obviously Kay was talking and interrupting my whole thing, and we didn't get a chance to really trade. The money trade for us is this 930 to 1030 NASDAQ move. This is what we want. We want to trade 2, 3, 4 times in the direction of the big trend. Then want to wait and watch for the correction. Then we want to maybe pause back and see where the corrections are. Now, I'm going to take out my favorite boomer tool, the magnifying glass. And what do we see here? We see green candles against a weakening red slope, right? You guys seeing the red slope? So that's already telling us, we want to take, maybe if we can get a red candle, I want to short this thing, but we're not. Price is getting, the bulls are fighting. They're pushing it back up to the 50s. Fine. Let them have it. We're perfectly willing and happy to wait. Let them exhaust themselves, or maybe they got more juice, and maybe they want to go higher. The gold bulls are still rebuilding. We got to see how they're going to trade against the session highs. If they want to run the 95s, then that's going to the next level of attack is going to be the hundreds. That's where they want to run us. So we'll see how the price action goes there. I still think that given all the movement we had so far, a distribution is more of a possibility than extension. Well, you never know. Where do I get the magnifying glass? Okay, let me remember what the hell this is. It's an extension in Chrome. It's called literally magnifying glass hover zoom in Chrome. Hover zoom. It's an extension in Chrome. Okay. It's really, really useful. Oops. So I'm actually going to go short here, guys. So NAS got a little bit red and slope was a little bit red. Now I may have pushed it a little bit too early, but I have a natural stop against the high, right? I'm going to have the limit here. And I'm at 35. I want to probably put myself at around 42 as my wiggle room position. You widen this out. NAS is obviously a much slower, quieter market than gold is in terms of resolution. It could take us like 4 or 5 minutes to get ourselves, organized. I'm kind of putting myself down. I want to see if the sellers have a little bit of pressure here, and they do. Now, I didn't take the full profit out of this thing, but I took a little bit. I took enough out of it, to make my life better for me and you. Oh, I'm actually. Where am I? Oh, I'm in the 24. That's right. The 24 is the NAS account. Sorry, I actually forgot. And the other one is these. See, the gold account is really, really rocking. Now, the gold account is back up to looking positive and then turning negative. So this is like my favorite thing here, because the buyers try to push it, the sellers are trying to push it back down. The slope starts getting red. I want to stay with the sellers here. If the sellers lose, then they're going to run this. I'm perfectly happy to join the buyers here if the sellers lose. We'll see how it goes. Actually, very, very indeterminate to trade here. So we'll wait for another candle here to give ourselves some breathing space. If they're going to run it, they're going to run it. If they don't run it, we can reshort once the slope goes red. Yes, the slope is what gives you the confidence. You're absolutely right, Seba. Slope is kind of like, your level of confidence, because slope is what I call the bullshit meter, right? It's the bullshit meter. The price sometimes can lie, positioning sometimes can lie, but the slope sort of, slope of course can also lie, but it relies less so. It's the what is that? Oh my God. Oh, what is it called when they polygraph test? Oh my God. Yes. Early onset Alzheimer's is here, my friends. It's the polygraph test of trading, in my opinion. Right? And we're just, we're just doing our thing. I see gold really, went way down. What did I miss? Oh no, this was NASDAQ. I'm sorry. I was watching gold. NASDAQ, came down, and NASDAQ, by the way, broke hard. I could have made a lot more money. I just, whipped out a little bit. And NASDAQ now is kind of a reversal trade, right? NASDAQ exhausted itself here. It may be, if I was focusing on NASDAQ, I would have traded maybe one more to the short side, because it's pretty clear now that, at least for the near term, NASDAQ is money to the short side. And that's how you kind of read the price action on a continuous basis. Now, gold is, holding bid. Slope is good. I'm going to get long here. I'm going to get long on gold because it told me that, slope was good. And come on. Hit me. There we go. And, you saw, right? I said, if the buyers are going to come back, I'm going to join the buyers. And by doing this early, right? Now, yeah, the label is here. The label always confirms everything. By doing this early, I'm just basically jump starting my own indicator. I'm kind of anticipating my own indicator by reading the signs a little bit early. Now we're back up to double top highs, right? And this is a very, in my opinion, a no-go zone. And if we blast through the double top highs, great. But the chances of us coming back off of it are pretty strong. And I don't need to I don't need to run into the wall in order to see how strong I am. I'm perfectly happy to let other guys do it. There's lots of opportunities during the day to do this, and maybe they're going to bust the wall through. That's great. But I don't need to be the guy that buys the second move through the 95s. So it sounds like the most valuable indicator for everybody in the session is actually the hover glass magnifying tool. That's the tool that everybody really wants, right? You took the gold trade. What happened to the gold trade? I haven't even looked at the gold trade yet because we've been asked. Which way? What'd you do with the gold? Oh, we're on NASDAQ. Oh, this is the gold trade. Sorry. I'm losing my mind. We are in the gold trade. The gold trade against the 95s. Did that work for you on the run? Were you able to convert that to a P&L? The close here was 92.9 and the high was 95. So yeah, that worked. I mean, they did run the thing, but you see, it kind of exhausted itself. And we can watch it very, very calmly now to see if it wants to come in. Good job, astrologer. You were the guy that I let run into the wall, man. You were the guy, how like in the army, the old guys let the young guys run the front, and they just stand back and see how well the enemy, how strong the enemy is. So you were like that guy for me. You were my cannon fodder, but you survived. Oh man. You see how it's really struggling in the 95s? They're having a hard time trying to push it. So we're gonna watch this. We're gonna see if the slope starts turning red, if they're gonna start to sell it off. Because I think if the buyers can't hold it, the sellers are going to try and gun it back down to at least the low end of this range, which is like 85s. Like right now, I don't have a signal because the slope is still green. You know, candle was a little bit red, but the slope is still green. But now, you know, and sometimes you miss the trade. Some, you know, this could be like the 5-point candle that we missed. And at which point, you know, it's harder. It's less. It's not as attractive a risk to take it if this thing is like 5-6 points down. But if it's 2-3 points down, it's not bad. But I'm waiting to see how it's trading. It's 27 seconds left. I'm trying to be a very good boy here and not press it. But you see now they pretty much created a double top, and this is going to be my zone of operation. I'm going to trade against this whole zone. I'm going to come in. All right, I'm going to sell this over here a little bit early. I'm at 87. I'm going to put in another one at like 90 on a secondary. We'll see if it starts to wiggle back out against me. My stop is against the natural high, the top high around 95s. That's the zone I'm going to operate against. Okay, I'm in here. I'm going to move myself over here for hopefully a quick resolution. My buy stops will be like right around here against the zone. And did I get done? Yeah, I got done. And I resolved it, and that's it. I trade the wiggle, I get it done, and then that's it. I waited patiently for the red. I took the signal. I traded the wiggle. I got done. That's it. That's literally all I do. It's the simplest, easiest way to scalp out forever. And I think at this point, guys, let's just look at my gold portfolio. I am at $400 dicking around. Just dicking around. My favorite kind of trades, the dick around trades. I'm at $400 since Kathy started talking. Okay? In this particular account, I didn't even do anything on 2 micros, in and out. Trade the wiggle. Well, so you guys want to see. Okay, hold on a second. I'll be right back. Hold on. Oh, there she is. Daisy, come here, baby. Come here, baby. Come here. Oh, I know. Daddy's torturing. Okay, you want to know who the wiggle is? This is my wiggle. This is Daisy. She is a Chihuahua Jack Russell Dachshund mix, basically like a miniature pit bull dog. And we call her the wiggle because she always loves to wiggle around, right? Now she's like, you took me out of my nap. I was super comfortable in my cage. You're a real bastard, daddy. So when you say the wiggle, that's who I always think about. That's what I'm trading. I'm trading the wiggle. Daisy is the best dog I've ever had in my life. I've had so many dogs. Everybody in my family cracks up that like the ranking of everybody in my family is like Daisy is first, and then whoever is my children, then some of the other dogs in my family, my spouse, everybody takes like 3rd or 4th places. It's pretty true. Look at the reversal. Now I got distracted. We could have traded the secondary reversal, but the point is, you see how the great thing about BFF is that when you overlay it against the price action and you begin to understand all of the things that are going on in there, it is such a fountain of super easy trades without even like completely formalizing all of our trades. You know, buy the neons, sell the neons, all the kind of stuff. Those are the basic rules to just learn how to speak scalping. But to really become good at scalping, you obviously can trade within the rules, just like in language, right? You learn the basics of grammar and then you break them all to be creative. And this is a good example. I just want to show you how you can break some of these rules ahead of time, as long as you stay within the grammar. Yes, Daisy to trade. Daisy is our trade mascot. She really is. So yeah, it really, that's the key thing. Have an anchor point that's a logical stop. Trade the first immediate change. I mean, if you're doing the reversals, or if you're doing continuation, you obviously just, if you're doing continuation, what you're looking for is just very, very simple. You're looking for the slope to be in your zone. Ideally, you want the trend to be in your zone. So like in a perfect continuation trade, you want the trend to be there, the slope to be there, the label to be there, and then you just and then you add the wiggle to that. So even here, you buy here, you resolve here. You buy here, you resolve here. You buy here, this just runs away for you. You don't have to resolve it. But if you're sort of on the big side of the trend, you could have traded this. And even astrologer, like I was going to say to you, let's say astrologer bought here, he took the first trade out, but suppose he came back down, you could have done the wiggle here and it would have resolved yourself the other way. So those are easy continuation trades. The reversal trades, for everybody who's a degenerate top picker and bottom picker like me, also become a lot more intelligent, because again, they give you early warning signals of when things reverse against a absolutely logical stop point, right? Like if the thing totally blew through 95s, if buyer just came in and ran it to 5,100, being out at 95 would have been the absolute correct thing to do, right? But I think the problem is, I guess this is what I'm trying to say, is with scalping, the biggest issues we had was that we would be right on direction, but wrong on execution, because we put these arbitrary stops in that would stop us out, and then the trade would work, right? And this is a way to give yourself the best possibility, the most intelligent entry, and the best possibility the trade works. At the same time, giving yourself a reasonable limit by both limiting your size, by making sure that your size is not so big. Because the worst that happens is, I lose a couple $100, right? Like a double touch at the highs, a couple $100 too. That's nothing. I move over to my next account. I just keep going. I can come back. I can bring that back account in a day on proper trading. That's what I mean about like trading small, hopping from one account to another, distributing your risk, and growing everything in a nice, smooth, upward fashion, right? Today has just been a great day where literally everything I'm touching is growing, but it's also because I know I'm not over leveraging. I know I'm not tilting. I'm not trading 10, 15, micros at a time. I'm doing all the things that cannot kill me, and that's the key thing. It's a combination of both entry, trade management, and risk management that comes all together in our framework, right? As a structure. So I hope you guys like all that, because I think all of this creates winning trade runs for all of us. So now we go into a little bit of a chop, right? Natural. There's a 1030 chop. Let's see what NASDAQ is doing. Well, NASDAQ's actually running. NASDAQ's hot. So NASDAQ's at session highs. Okay, and here we're going to trade NAS. Again, I know that the temptation is to trade the highs, but my view is that the better risk trade here, given the fact that we ran 4 or 5 neon labels to the upside, and we're at the 2,500, 900 round number, is I want to be looking at possible reversal trades here. Yeah. And you know, MNQ is definitely was a great. And if we focused on MNQ, we would have been able to trade it. But we focused on gold because gold has been the trade. Like I said, we can only focus on one thing at a time because you need to be able to really time it, manage it, and trust. That's the other thing is just focus on one thing at a time. You know, we had a great prop fest, and Jim had emailed me what we talked about, sort of like the 10 commandments of prop fest, and I'm actually going to take his writings. We're going to tighten it up a little bit add some more of my own ideas in there. But one of the principles, one of the absolutely, you know, unifying principles, because the idea was, what are the things that everybody at PropFest said? Everybody traded very differently. Everybody had different strategies. Everybody had different approaches. But there were certain things that everybody said in unison, right? And those are the things that I think are really, really important, because everybody can have different strategies. Everybody can have different approaches. But there are certain rules that everybody who was successful shared. And those are the rules that I want to put together into the whole thing. Sorry, I'm yapping. This is a tough trade. I probably would have taken, if I'm willing to basically absorb against this high, right? I would have taken this trade here. I was yapping, but I would have taken this trade here, and it probably would have been a nice trade, because you see what happened here in terms of, you know, my analysis. It's hard to see here but if you go over here, what happens is the slope turns red right over here. And this candle closes red, the slope turns red. I would have been short here. That would have been actually easy 10 points to the downside, right? But you needed to be in it to win it. And the other thing that I think very true with our setup, but was also kind of uniformly said at the Prop Fest, was if you missed your trade, don't take the trade. Like, don't chase the trade. There's always another trade. There's always another trade to take, right? So, you know, now I'm gonna sit tight. I tell you, it's been a pure pleasure to trade Asia last night, to trade a little bit of Europe today in this kind of a format. You are not stressed. You know exactly what your targets are. You know, if you get stopped out, you know why. You know where the limits are. These are all things that hopefully give you both financial and mental strength. Today there's no subtitle. Yeah. Oh, you mean like for Apex and everything else? Just because you know I'm using case container. Tomorrow there'll be tomorrow. Just to let you guys know, regular time trading. We're gonna come in 9 o'clock to 10:30. And then Wednesday, we're definitely going to trade the Fed. I don't know if maybe depending on how much stuff we got to do, I'm going to try and maybe we'll trade double session. Maybe we'll trade the morning session, and then we'll definitely trade the Fed session. Even though Fed may not be a big market mover, I think there'll be enough volatility, and there'll be like enough interesting stuff for us to be able to trade the Fed. So we're definitely going to do Fed trade on Wednesday, and then we'll also do Thursday trade, and then Thursday evening to like the weekend, we're actually going to be with Big Mac Daddy in Hollywood, so no more trading after. But I will be trading Thursday morning, but then after that, we're not going to trade. So that's the story. Anyways, I got to run, guys. 10:30. The boss is going to yell at me now, but this was a really fun session just to show you all of the techniques and all of the structures to leave it in your hands. And we'll review all of this, of course, on a day-to-day basis, but I hope you really enjoyed it. I know a lot of people obviously banked. You know, as I said, I banked all my trade evades. I'm running right now on wealth charts. I'm just going to try to run my evals and get those funded, and then we'll try to bank the funded. I think this is the way for us to go: slow, steady, but very, very ready, very profit ready. Slow and steady and profit ready. That's the motto for us for today. All right, guys. I'm glad you guys enjoyed it. I'm glad you guys met Daisy. And I'll see everybody tomorrow, same time. Thank you, guys. Bye-bye.